Welcome back. Well, the markets have taken a deeper dive now. We're down close to around 270 points on the Nifty itself. But let's try to find out what's going on in dealing rooms. Nimesh joins us. Nimesh, tell us first up, what are you picking up in terms of D-Street chatter?
Nigel, not looking good, right? I mean, it's an ugly-looking screen. The mid-cap index have fallen. Small-cap index is down more than 4%. Macro-cap index is down 4.5%. And, on Friday, there were first signs of some bit of, panic in the broader markets. And today, it's a sign of capitulation. Clearly, a lot of mid-cap, small-cap stocks are down 10, 15, 20%. The breadth is quite weak as well, right? Advance decline ratio is quite weak.
Yeah.
But, again, the feedback is that in many of these mid-cap and small-cap, the fall is not on very large delivery volume. So that suggests that this is not led by institutions, but it's largely led by the retail and HNI investors. And it looks like more of unwinding or a forced selling, so to speak, by the retail investors in the broader market. So that explains a bit of pain in the broader market, so to speak. In terms of flows, again, it's a mixed day, not much from the buy side, from the large institutions. But I guess it's the financial, which is again a pain point. But what I observed in the last half an hour of trade was once we broke that 19,450 on the Nifty, there was a very strong support from a technical perspective. Once that got taken out, we saw a sharp vertical fall across the market. And now the next level to watch will be 19,250 on the Nifty. If that seems to get taken out on the downside, then it will open up a big, kind of selling pressure in the broader market. So that's overall feedback. The bigger pain is in the broader markets. Looks like it's a bit of a capitulation, but it's largely retail driven.
All right, and we're almost there actually. 19,250, just 20 points away. And for the Nifty Bank, we have broken the 200 EMA.
Yeah.
So that's a bit of an issue. But before we get to the stocks, Nimesh, a lot of HNIs. You mentioned that a couple of times.
Yeah.
Did you speak to a few of them? What is the feedback you've got?
I did, Nigel. For a change, I just wanted to understand what the larger HNIs are doing. So I just did a short, dipstick with some top 5 large investors, large HNI investors. One is, heading a family office. One is a super ultra HNI investor. They manage their own personal money as well. So whole host of HNI investors who are very active in the market. And the overall feedback was very simple. One, the correction was long overdue, right?
Yeah.
We've been saying this for a long time. That India market was actually ignoring a lot of the global weakness. So that seems to be now catching up in the broader market. So that's the first feedback. The other big feedback was don't just get carried away and try to buy the first fall.
Correct.
So nobody's willing to buy in today's fall for sure. There is a feedback that maybe you can see further sell-off, another 15, 20, 30% as well in many mid-caps and small caps. And the only reason is valuations. The valuations in many of these companies are just not justifying the kind of rally we've seen in many of the broader market stocks. That's the feedback as well. The other sign is the sentiment. If you look at today's market, the good news, the good numbers got sold into. That are signs of that there is now the sentiment is for the weak as well from the larger community. And what are the risks for the markets? We've been ignoring for a very long time, but global risk off is clearly there. Your 10-year is at 5%. Remember, November, December will be a 5-state election, so that outcome could be very crucial for the markets. And also, the earnings are not that great, right? I mean, we've seen some positives, but at the margin, the earnings have been quite average. So valuations are stretched and earnings are not supportive. So these are the reasons why there are massive headwinds. So the one-line message is it's the first signs of a fall. Don't try to capture don't jump into it. Wait for it and look at valuations and then look at buying into this weakness.
Okay, all right. So we have got the institutional flows, we've got the HNIs. Now tell us about stocks, because they continue to do the thing of their own. What have you heard?
So in terms of individual names, the first stock on my list today is IndiabullsHsg. It's a trader's delight. A lot of traders punt into it. Big sell-off in today's market and on good volumes as well. I believe in fact, on IndiabullsHsg, the feedback is maybe one of the strategic holder who owns close to 3.5% stake in the company. They are the likely sellers in today's fall. So that explains the big fall in IndiabullsHsg today. The second stock is JSWEnergy. Despite good numbers, that stock is under pressure today, and some sell-off as well at the HNI desk. And in JSWEnergy, the feedback is that maybe watch out for some corporate development in the near future. There could be some management rejig as well. Remember, with the results, they also announced a new COO. So further changes at the top level is something which needs to track in JSWEnergy. The third is a combination of auto names, TVSMotor and M&M. While there's a lot of sell-off in a lot of the mid-cap and broader market stocks, these two stocks, TVS and M&M, stands out purely on buy flows at FIDs. So it's not like it's a one-way sell-off across board. There is buying as well, and this to stand out purely on buy flows from larger FIs. And the last one is IndusIndBank. Again, we saw a bit of momentum on hopes of MSCI inclusion, but now there is clear selling pressure for the second day running. The FIs are net sellers, so expect high delivery volumes in IndusIndBank in today's trade.
Okay, thank you very much for that. The bears have tightened their grip on